Sintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning as usual on September 26th. So the last week or two, we've talked about some elevated near-term risk in the market. We had sort of a straight-up run in the indexes for most of September. Late September is usually seasonally a weak time of the year. I'm not a big seasonal guy, but it's pretty consistent that it's at least tricky. And then you've had some speculation and some, just some big moves among some speculative stocks, things like that. The good news was out with the Fed, so on and so forth. And we've kind of seen a little bit of that come home to roost this week. The major indexes are down, not a lot, couple percent from high to low at this point. But number one, we've seen some of those high flyers really come back to earth this week. There's a few that are down 10, 15, 20% in the week. Now, of course, they just went to the moon, so they're not technically broken, but it's definitely a shot across the bow. The other thing we've seen actually is in the broad market, the number of stocks hitting new lows has been picking up. There's actually more new lows than new highs on yesterday as I record this. And they've been above a comfort level here for the last few days, even when the indexes were hitting new highs. Now, what does it all mean? Well, big picture, I still, there's no 100%, surety in the market, but the odds still strongly favor higher prices down the road. I think the question is, are we getting to the point where we finally, after a 5-month run, have a quote-unquote real, pullback where the indexes break 50-day lines, a lot of stocks get hit, fear ramps up a little bit. I'm not saying a repeat of April, or March and April. I'm just saying something where the indexes lose a few percent, some of the leaders crack, there's some bad news out there, so on and so forth. My answer to you is I don't know yet. There's not enough evidence yet, but I would just say that what we talked about last week I think still applies this week. Number one, taking things on a stock-by-stock basis. Some things look fine. Of course, some things didn't have huge runs. They're just kind of hanging in there. Other things are, still base building, so on and so forth. Of course, others are coming down hard. So take each stock on its own and practice some portfolio management. If you're on margin and you have a ton of high flyers, raise your stops, maybe take some partial profits. On the buy side, be a little bit more selective, and then be flexible. We'll see what happens. Obviously, if we unravel here, it's going to be time to sort of, pull up your stakes and move on a little bit, at least in the intermediate term. But I would say if we pull back a little further and then really ramp, say, as we go into October, there's been a lot of stocks that have just been sitting there for 4, 8, 10 weeks. And if they kind of shake out, break out, it could provide some good entry points as we head into earnings season. Overall, I would just say leaning bullish, but there's certainly a few storm clouds out there, so make sure you have your umbrella. In Cabot Growth Investors model portfolio, we didn't do anything this week. Of course, we still have about 38% in cash because most growth stocks have been software, retail, crypto, all this stuff have just been kind of sitting there, if not selling off. So we're just sitting there, and we'll just go from here. Obviously, if we sell off, we'll raise more cash, but hopefully some of these things that aren't high flyers can hang in there and, like I said, break out a couple weeks from now. Okay, that's enough for the intro. Let's hop into the charts. As usual, I'm using a program called Market Surge. Product of Investors Business Daily. You can learn more at marketsurge.com. So here's the NASDAQ. Again, with the major indexes, not that much has changed here. We are working on, as I record this, our 4th straight down day, but still above the 25-day line, still well above the 50-day line. Nothing huge there, okay? Down, I don't even know. At this point, let's just see as I record this. The NASDAQ, it doesn't even have it here, but I'll say this. The QQQ, so the NASDAQ 100, it's 1.8% off its all-time high. So, it's not the be-all, end-all when it comes to the major indexes. The S&P 500, I think from top to bottom, has corrected a max of 2%. So no big deal in terms of that sort of thing. The broader index is not quite as great. You can see here's the small caps, S&P small cap 600, kind of treading water, still positive, which is the most important thing above the 50-day line, but not doing too much. Mid caps actually did test their 50-day line, so they're the weakest of the 5 that we track. And the New York Composite, again, still looks fine, couple of down days and hanging in there. When you dig below those indexes, it's just a mixed bag. So like here's the IPO fund, and they probably, to be fair, they probably own some of these high flyers, but you can just kind of see straight down to the 50-day line after a, pretty decent sized run from the April lows, of course, elongated run time-wise. So that's coming down. The Momentum Fund, MTUM, we looked at this last week. Again, that looks fine, though. So it just depends kind of where you're looking. RSP, this is not growth, but this is the equal weight S&P 500. You can just see it hasn't been doing anything here for I'd say since mid-July, testing the 50-day line. Of course, if you strip out all these lines, which I can't do easily on Market Surge right now, but if you stripped out all the moving averages and everything, it's still hanging around. I mean, it's barely off all-time highs, multi-month highs, obviously. So it's not that it's weak. It's just that things have kind of stalled out here. XLF, we mentioned last week. Again, just kind of, grinding here sideways. If we tend to get, this is for XLF, but, for any of these indexes, maybe you get a little bit more weakness. Next week, is a new month. So October starts on Wednesday, I think. Say we sell off into early October and then we break the 50-day lines and then we ramp back up. That could be a nice shakeout, get some sentiment negative. Maybe there's a little bit of rotation into some fresh leaders, some of these things that have been sitting around for a few weeks, you know what I mean? Or provide some pullback entries in some of the strong things. So that's something I'll be looking at. But right now, it just seems like a lot of the market is basically not doing much. And then you have some random news and some usually more speculative names, not always, that have been going up. So until that changes, we'll just have to see how it plays out, up or down or shake out, then back up. But right now, I wouldn't be buying everything because of a 3-day dip, but I also wouldn't be panicking because we've seen a little bit of distribution creep in, okay? Just to run over, I just want to talk about interest rates, the Fed cut rates, and we've seen this is the 10-year note, back up a little bit. Not unusual. Overall trend is still down here. I think how it goes from here will be key. Does it hit the 50-day line and back off? Does it just roar ahead from here? Obviously, there's going to be economic reports and stuff. But so far, still in a downtrend, but, worth monitoring. Once again, XLP, nothing really to say here except it's still weak. I mean, I guess it's up today a little bit, but it's still very, very weak. So no rush into defensive stocks despite this distribution we've seen. If anything, we've seen some cyclical names, which we'll talk about in a second, pick up steam. At the outset and last week too, we talked about stock by stock, okay? It's key just to have a plan. The plan has to be based in some reality, but honestly, the most important thing is to have a plan as opposed to have no plan. That's really the biggest difference, okay? This is Astera Labs. When you look at this chart, the stock was $100 back in July, went to $250, and of course this was after, it was $100. To be fair, it was after many, many months of correcting and consolidating, and then it had a huge move, and now it's back down. So it's not a huge deal, but or at least it's not completely broken. At the same time, as I record this, the stock's down 20% this week, which is, if you don't want to say it's broken because above the 50-day line, you can say that, but it's certainly a shot across the bow. Okay, CRDO, which was another hot networking play, not as weak, but again on this, on the weekly chart, not broken, but you're down 17% this week as I record it. It's something that really hasn't quite been seen. I guess this was a pretty tough correction in here, but the market was pulling back as well. So, we'll see how that goes. Bloom Energy, again, some of these things have we had this in top 10. We sold it probably around here. We sold it kind of on the way up, kept going, came back down. But you can see again, the stock is above its 25-day line, but it's down 20% this week. So, could these be shakeouts and we come back? I'm not mentioning these stocks in particular, but you have some of these high flyers. Could they, just come all the way back? It's possible, but, you got to just use some logic here and just be like, what, after a stock goes from 30 to 85 in a few weeks, it's earned the right to rest. So we'll see how things play out. But the point is if you own these, it's been a great ride. But you want to have, maybe partial profits, some sort of stop in there for some of your shares. Make sure you have a plan in case this is a top and these things do pull back and they correct and consolidate, which, they've certainly earned the right to do. Okay, if they get up going from here, no problem, all right? In terms of stocks to watch, now, these are high flyers, but to me, they seem earlier stage. This is Micron. I'm just going to run through them and then I'll come back. So this is Micron, MU. This is SanDisk, SNDK. This is Seagate, STX. Now, I would say Seagate, I'll say Seagate and Western Digital, which are cousins, basically, in the hard disk drive space. They have been running for a bit. You can see on the weekly chart, obviously, right off the lows, they changed character. They did have a brief rest period 4 or 5 weeks in the summer before kind of going nuts on the upside. Some of these others like MU, they just broke out a few weeks ago. That doesn't guarantee anything. And MU reported earnings this week, and it's percentage-wise, it's down. I mean, it doesn't look that big on the chart. but still, it looks fine. Okay, so these are some things where I'm not saying to go out and buy it after 2 down days. Maybe you do. It's up to you. But maybe we come back a couple weeks from now and the stock is sitting around here. Maybe it went up, it came down. Who knows what happened? But the moving averages start to catch up, and that sort of thing. SanDisk has had even more. I mean, the stock went from basically more than doubled in a few weeks. This is because prices are going wild, supposedly, for the hard disk drive. For the solid state drive and hard disk drive stuff. So now it started to pull back. Let's see how it pulls back. Does it kind of just stay relatively tight given the run? Does it just unravel? But these are names I have my eye on just because they're usually not these true growth names. Are kind of more cyclical. But when times are right, these things can really move, as we've seen. And usually they don't move just for 4 weeks, and then die. So I'm thinking that this consolidation, if it turns into a consolidation, could prove viable, okay? In terms of pullbacks, this is AppLovin, or looking for pullbacks, I should say. This is APP. Very unusual that it had such a big run last year and then really a big correction and has come all the way back. Some of it was due to it got added to the S&P 500, but that's out of the way now. This would be one, if we shake out a little bit in the market and this doesn't completely implode, would be one either buying on dips or, some sort of support. Corning is another one. GLW, you can see it's barely pulled back at all here. What's impressive to me is just look at it broke out back here on earnings, had a nice move. Of course, we sold it too early here in top 10 maybe, but it's really, it was good. It was a good trade, but it really has shown some explosive volume characteristics on the way up. Again, it's extended here, but the longer these things can hold up at quote unquote elevated levels, the greater the chance that they'll eventually continue higher. Nevertheless, just something I'm watching for some sort of pullback. Just going through a random list of names. This is Xometry, XMTR. This one's definitely thinner, but you can see it's just been grinding. Huge volume breakout on earnings, just, very, very noticeable. And then it's just been grinding higher here. It did get above round number resistance at 50, which it was kind of battling with. Obviously volatile up and down here with the market, but overall this week, holding pretty firm. ARGX, biotechs they've started to weaken again, but we'll see. This is ARGX. It's not the fastest horse. You can see on the, these other AI stocks were like this, right on the same chart. So it's not your fastest horse, but it certainly made pretty good progress. Nice move on earnings here. Nice move to new highs, and now it's sort of pulled back here pretty steadily into support. 700, 50-day line's pretty close. So seems like an interesting setup. I mentioned earlier some of the rotation into cyclicals, not just like gold stocks, but some of the cyclicals. So this is FTI, which I've mentioned before. This is Technip, symbol FTI. Very rare that you're going to find an oil stock of any kind, whether it's drilling or services or exploration, that's hitting new highs or near new highs. But you can see FTI is the exception, and it continues to act well. And then you have Baker Hughes, which is, big, quote, old and slow, BKR. But a nice breakout here. We had this in top 10 a few weeks ago. But a nice consolidation in here, reacted well to earnings, I don't know, month and a half, 2 months ago. And it's just, again, been grinding higher. And this week, kind of leaping, testing round number resistance, but leaping to new highs. So we'll see how that plays out. I'm just mentioning these for I should have put this in the earlier section. We were talking about the market. I do find it interesting that here's Goldman Sachs and here's Morgan Stanley, GS and MS. Both of them looking fine and both of them hitting new highs. And of course, this is with the market pulling in a little bit, and it's with, as we looked at earlier, financial stocks as a whole, okay, but just kind of grinding mostly sideways. I do find it interesting that you have kind of two of the big investment houses, on Wall Street still holding their own. I wouldn't say predictive, but I would say, if the market pulls in a little bit further and these continue to remain resilient, I would say that would be a little bit more meaningful. So just something to keep your eye on. Reddit, RDDT, I love the story, I love the numbers. And honestly, when you look at the weekly chart, it doesn't seem abnormal at all. You had this massive kind of a breakout here on earnings, and the stock went from, call it 170 to 250. I mean, in 3 weeks. So then it got hit and it went back up again. This week it's getting hit again. It's down 10, 11% as I record this, but quote unquote only to the 10-week line, okay? So very volatile. I mean, the thing just went from 280 to 225 basically in a few days. But let's see what happens with the market. But this is one still on my watch list. And if it can a lot of these, if they can kind of settle down and they hold support, I think it could be some decent entry points, but we're not quite there yet, at least the way I look at it. AVGO or Broadcom, AVGO, obviously a blue chip in the chip space. Gaps on earnings here, and you just kind of have this nice, pretty well controlled pullback. There's been a little bit of selling in here. One of these was options expiration last Friday. But to the 25-day line, there's a lot of these stocks that whether it's here or they keep pulling back, if they can kind of show some relatively decisive strength on a rebound, you'd say, oh, maybe the pullback's over. We haven't seen that yet. But either way, acting normally. I'll mention NVDA too, NVDA obviously. It's kind of in this, let's just see the weekly chart. 1, 2, 3, 4, 5, 6, 7th week of a consolidation in here. It did have this volume cluster. I think I've mentioned that before. 4 days before and after earnings, which has proven to be resistance. That said, it's been very, it's been a 20-point range, which is, call it 10% in total after this very, very strong run. Obviously, if the market sells off, all bets are off in the shorter intermediate term. But so far, it is kind of intriguing. And the longer it can kind of hang in this area, the greater the odds it'll eventually follow through to the upside. Again, this is kind of on the same theme as like Reddit and some of these pullbacks. But this is Viking, VIK, the cruise ship. Good numbers here. You can see sales and earnings estimates. You can see down here, they're cranking ahead. Nice run, clearly out to new highs. A little bit of a pullback here. Now you're getting a pullback to a little bit below the 50-day line. Can it rebound? Can it hold support? Just something to keep an eye on. United Airlines, obviously, these are two more cyclical names, obviously. UAL rallied all the way back to its old high, having a rough week here, down 7%. Again, though, pulling in to support at the 50-day line. Can it hold or not? Even if you're not interested in these stocks, I watch them because let's say they both rebound strongly. Maybe I don't buy them, but it's a sign that, okay, there's some dip buying. Or if they really crash lower, it'd be a sign that maybe there's a change in character for these stocks and maybe some broader themes going on too. Last but not least, back on the growth thing is Cloudflare. I think I mentioned this before. Sometimes you see these sort of relative performance based, not to go on a tangent, but you see these sort of, they're not a consolidation, right? The stock hit a new high here, but it hasn't really hit a new relative performance high relative to the S&P 500, that is. So maybe, if it can, again, you don't want to see it down here, but if it can kind of hang in here and the market comes out of this funk at some point and this, rebounds here and the RP line confirms, I feel like it could almost be a fresh, I'm not saying it's going to be an entry point like back here and it's going to repeat that, but it could be kind of a fresh lower risk entry point, depending how the market lines up, okay? Going back to the indexes, we'll see how it plays out here. We're 3 days, maybe 4, I guess, if you count today, into a pullback. It could, you can always say, hey, that's the top, or maybe we bounce and then it's a double top or whatever. But right now, I would just say that most things are still in uptrends, the indexes, most stocks. We have seen, I think, some shots across the bow. I think some of the extended names have hit air pockets, obviously, I showed you. So you want to have your plan in place and all that. But if you have some stocks that are tedious but just kind of sideways, base building, they're in longer-term uptrends, just give them a chance, see how things go from here. Most of all, stay flexible. If we do come in next week and we start to see the UALs, the Vikings, we see the NASDAQ, we see some of these things that hit air pockets really continue lower and get hit in really big distribution, yeah, I think that would be the sign that we're probably starting some sort of correction. We'll see how it plays out. But you have to see it first. At this point, you have to give the benefit of the doubt to the uptrend in the market and most stocks, and we'll take it from there. Okay, that's all the time I have for today. As always, thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.